How's everybody doing?
All right.
Great. Yeah, I don't really need a mic. I'm loud enough. Oh yeah. So I'm honored to be here. You know, I feel like you know, the information that we just heard from my brother right here, dude. I mean, I need it as an insurance agent. You know, so thank you for Brother Joshua. Thank you for inviting me, Miss Lenora. You know, she's she's a gift. So yeah, I'm a life insurance broker. So unlike State Farm or Progressive or the other insurance companies that you may have heard of, they can only serve a certain group of people. So if you're not in a special class, maybe in good health, you know, you got all your ducks in a row, you know, things like that, they can't help you. So with me, I work with 20 different companies. So that's for the person who has a lot of money to put into a policy, or the grandmother who's on a fixed income, right? So this is what I want to tell you my why. Why do I do life insurance? Like brother said, you gotta have a love for it. And I have a love for my people because I've experienced a lot of loss in my life. So as you can see, I have a little pin here, and it's my sister who is 11 months older than me, and I'm trying not to get choked up. But she's like 11 months older than me and my twin. And in 2021, she passed away. And lo and behold, the person who was doing her policy, her claim for when she passed away, actually asked my mother if she knew anybody that wanted to get into life insurance. And so she said, hell yeah, my son. I'm like, no, I don't want to do life insurance, you know. So long story short, I love what I do. Been in the game for 4 years, but just want to share a little bit of what I've learned in these last 4 years. So we're going to talk about building a secure future in life insurance for families. So just want to raise some hands. How many people have life insurance right now? Okay. Another raise of hands. Do you think the amount of coverage that you have is enough? There's no right or wrong. There's no right or wrong answer. We're just here to educate. Okay. All right. So the importance of life insurance. So statistics have shown that 56% of African Americans are insured, but we're still left behind as far as like transferring wealth. So the largest transfer of wealth is through life insurance. So you probably heard about the Rockefellers and the Vanderbilts, right? So what the Rockefellers did, the reason why they have trillions of dollars is because they created a family bank, and they put all their insurance policies when the child is born 2 weeks old. They get $1 million cash value life insurance policy. So by the time they turn 18, they have options, right? So me personally, I have 2 daughters. One's 13, one will be 2 in December. So y'all pray for me. So they have a policy. So when my youngest turns 2, she will have access to $200,000 in cash value. Just by making that little sacrifice, right? So life insurance can help bridge the gap provided by financial support in the case of death. So most people, that's what we think about. So life insurance, oh, when I die, then I can use it. And I also can pay off debt. So that's when I ask you the question, do you think that you have enough life insurance to, the right amount? Because a lot of people, when I talk to them, especially in the black community, it's like 5,000, 10,000, maybe 20,000. But you also got to think about this, like if you have a home, you got to pay it off. If you have bills, those bills have to be paid off, because they don't stop just because you die.
That's right.
They are passed on, right? And so, just giving you a little personal testimony, I lost my mother before I lost my sister, a year before I lost my sister. And she didn't have life insurance. So you're sitting at a table, right? The funeral director's telling you, oh, sorry for your loss, but you guys still got to pay that $10,000, $15,000, right? So you're not able to breathe because we got to come up with this money, So it does alleviate a lot of stress, and also you're throwing your money forward by having life insurance. Okay, so how many people understand the different types of life insurance? So I know, does anybody know what term life insurance is? Okay, brother, what is the term?
Well, I'm sorry.
You can, yeah.
No, I'm saying I'm trying not to have this pick up.
Okay.
But basically, in a nutshell, it's having a extended period of life insurance for a term, for a period of time. It could be 20 years, and then you got the different whole life, and you got the other one.
Okay. All right. So yes. So basically, term insurance is basically for a set term. That could be 5 years, 10 years, 20 years, right? It holds no cash value whatsoever. So after that term is over, your money's gone. It's gone. So it does have a benefit for, like, if you have small children. So if you were to die in that time, it would cover, whatever bills, homes, and things like that. But also too, term insurance can be used to pay off your home. So what we call it, mortgage protection insurance. So let's say you had a mortgage for 20 years, right? Now, when you're purchasing a home, your lender wants you to purchase the mortgage protection through them, right? So in the event of your death, the bank gets paid, right? So let's say I've been paying on this house for 10 years and I only owe $90,000, but I still have a policy of $200,000, right? If I have it through the bank, I die, they get to benefit the money that's left over. But if I take out one personally, that's going to my family, all right? So big mama, grandma, grandpa, another statistic for you, there is $22 billion of unrealized real estate in the black community, because a lot of us don't put anything in a state, or when grandma, grandpa, mom, dad passes away, they didn't have enough money to cover that. So now the state is coming and taking that property. So just wanted to kind of give you like a real factor, or stress the importance of making sure that you're getting this taken care of. All right, then we have whole life. So offers lifetime coverage, accumulates cash value that can be assessed through loans or withdrawals, typically a higher premium. So a lot of people like to want to stay away from whole life, But whole life is where it's at, really, to be honest. I was talking about the Rockefellers. The reason why they're able to amass so much money, and then what a lot of people don't understand is your banks. The top 5 banks in America are backed by whole life policies. So when the vice president or the president of the bank, they take out a huge policy, right? So they can accumulate cash accumulation at 6%. So they're taking your money and investing it and getting 6%, while you're getting 0.001 on your money, right? So I work with a lot of real estate investors in the city who love these policies because of 3 things. They get quick access to their money. They're getting between 5 to 8% on their money, and they're also able to access this money tax-free. So this is the things that they're not being taught about in school. So let me give you a small example. A good friend of mine who's a real estate investor in the city is taking $20,000 a year and putting into a policy, right? So first year he's getting access to $17,000 of cash accumulation, plus he's getting a dividend. So you want to, when you're choosing a whole life company, you want to make sure that it's through a mutual company. So you're getting, not only you're getting cash accumulation, but you're also getting a dividend. So that dividend could be $800, $200, $50, right? So you can tell the insurance company, hey, I want that money, right? But that's taxable income. So you don't have to pay taxes on that money, right? So how I advise my clients is to put that money back into the policy and let it compound, right? So by the time he's only paying it for 20 years. In 20 years, he'll have $1.2 million of cash accumulation that he can access at any time. There's, unlike your 401ks or anything like that, you have to wait till you're 59 and a half, right? So after 31 days, let's say brother puts $20,000 in, after 31 days, you get access to that money, right? So in insurance, they have to guarantee your money. So unlike the bank's using your money and spending it on whatever, with life insurance, they guarantee your money and then they give you their money, right? And your money is growing at 5 to 8%, right? Also, when you pull that money out, the reason why it's tax-free is there is a loan provision in there that states that you're borrowing against yourself, right? So as long as you're borrowing against yourself, it's tax-free. So if let's say Miss Lenore had a property that she wanted to purchase, right? She had $60,000 in her policy. She goes in, calls the insurance company, hey, I need that money. She pulls it out. She purchases the property right then and there, right? Then she does the flip. Whatever money that she took out, she puts it back in. Now her money doubles. And then she can do this multiple times. And she can take out as many policies as she wants to and do it over and over and over again. These are the things that you're not being taught. So going to universal life almost works like a whole life policy, but a portion of your premiums is going towards an index. So that could be the S&P 500, that can be the Barclays, Fidelity, and so it goes up and down. So one year you could get 6%, next year you can get 9% on your money. But unlike the 401k, if the stock market crashes, your money just stays the same, right? So the IUL, what we call it, is mostly for retirement. So any business owners in here, you want to use that policy for retirement. And also the great thing about IULs is that when it's time to retire, it doesn't affect your Social Security. So let's say you've been putting some money in there for 30 years and you had at least $500,000-$600,000. Well, you can pull that money out and it won't affect your Social Security. You know, and then also you can utilize it as, you know, for your business. Also, I know Miss Latoya, she's not here, but for your business owners, so like let's say if you're buying materials, you can utilize the whole life policy and the universal life policy, taking that money out tax-free and then buying your materials, and you're getting tax deductible both sides. So you're basically playing the game. So I know Donald Trump might not be the most popular person that we like, but he's taught the game. And these are things that, you know, I want to teach my people about, because if 5 of us, right? If 5 of us had these policies, and let's say in the West End, we're able to purchase property and we get to direct the narrative, right? So if we knew that, let's say a major building in the West End was needing to be built, to be bought, or that was up for sale, I could call this brother and say, hey, there's a building that is up for sale. Hey, he's gonna call the insurance company, hey, pull that money out, we buy it the same day. So, okay, concerning your needs, what are your financial goals? So when I'm talking to clients, I'm not just trying to sell you a policy. I'm asking you, what do you want in this policy to do for you, right? So, you know, whatever stage of life you may be in. Now, the person who's in their 20s, you know, they got kids, may not have the same goals as someone who's in their 60s that's about to retire, right? So don't let, like when you're shopping for insurance, don't let someone just sell you a policy. Know what you're on this policy to do, you know, and get the right policy for you. Another story, my mother was actually talked out of a policy. She had a $300,000 whole life policy in 1977.
Wow.
Yes. She was paying, I think she was paying $150 a month in 1977. She had the policy for 2 years. Someone came along and told her, hey, you don't need that policy. You need to go with term, which there's nothing wrong with term. But if she would have had that policy today, just think about what legacy she would have left us, you know. And so that's what I want, you know, for us as a people, that we start thinking about not just now, but what's to come, right? And so also your income, you know, especially us men, definitely want to talk to the men for a little bit. Most of the ladies, our wives, thank God for our wives, because half of us wouldn't get insurance if if it wasn't for our wives. And I get that a lot, that the wives are having to sneak and get policies on the husband because we're not doing what we need to do. And I'm not preaching to nobody, but just trying to get us as men to see that it's important to lead from the front, right?
That's right.
And you know, if the head is right, everything else will follow. And so just wanted to stress that. So how am I doing on time?
Got 38 minutes.
38 minutes?
Oh.
Oh.
Excuse me. Sorry about that. 22 minutes.
22 minutes. All right. All right. Finding the right agent and broker. Me. Looking for an agent who understands the community's financial needs. Definitely in the past, everybody knew the insurance agent. He would come in the community. They would come in every Friday. Collecting the money. And actually, my uncle. I'm actually a second generation insurance agent because my uncle was a mortician, insurance agent, and he was a barber. And so definitely you want to stick with someone who knows the needs of the people, that's not just going to try to sell you, just sell you anything. And I think that's, in the black community, is the hardest part that we had to fight as agents, is the distrust, having that trust. So I definitely want to gain your trust, so sitting down, having a conversation, knowing about your kids, I'm not your typical agent. Like I want to know all about that because I want to be your agent for life, So, it's good to interview agents, insurance companies. Ain't gonna hurt my feelings, money's gonna come regardless because my motto is if you do a good job, money's always gonna come. So, all right, and then ensure that they prioritize building a relationship and understanding your goals. So definitely, like I said, if I do a good job, you're gonna tell your aunts, your whole family, friends, or whatever, and then it just keeps rolling on. And then negotiate and compare rates. Don't settle for the first quote you receive. With brokers, we're able to shop for you. So if you get denied on one company, I can go to 10 other companies that will take you. So you can get insured. Get quotes from multiple companies to share and compare rates and coverage options. Negotiate your premium. So I can, I ask you, Miss Lenore, hey, how much can you afford? She tell me, hey, I only can afford $60 a month. Well, I'm not going to try to give a policy that's $200. I want you to have something that you can afford down the line, even if you have an emergency. The insurance policy ain't the first thing that you get rid of, and that's unfortunately that's the case for some people. And then be clear about your needs and ensure that the policy aligns with your goals. Okay, securing your future starts young with insurance. Dr. Boyce Watkins, I don't know if anybody heard of Dr. Boyce Watkins. So he has a class here at Simmons College. Before you can take his class, every one of his students has to have a life insurance policy. I think that's a good thing to have, to do. In other communities, when a child is 2 weeks old, they have $1 million insurance policy. That's why some communities are ahead of us, because they see the importance of making sure they start young, and then the cost of insurance is low. So I'm always transparent. So $175,000 policy for a 2-year-old is $19 a month. So we throw $100 in there, so you're compounding. Your interest is, your cash accumulation is growing faster. So if we both did that, me and my wife did that, we dumped $200 in there. Now it's growing more faster. So with you having children, definitely I would definitely beg you, implore you to make sure that you can get these policies. Maybe, like for me, like when I first started my daughter, like I had a height and weight issues. Just use your children, you know, till you get where you need to go, and then you get the right policy for yourself. You know, locking in lower rates early, they can save you thousands of dollars over time. So think about it, when you start out at 60 with a policy, yes. And then people get mad at the agent, like we gave them, you know, we created the number. No, you just procrastinated and waited too late to get insurance. You know, so definitely get it at a young age. I was able to speak with college students last Saturday, and they were asking, like, what age can I start getting insurance? 18 in the state of Kentucky is 18. Different ages. In South Carolina it's 15. North Carolina, I think as well, is 15 as well. So, of course, health is wealth, especially if you're wanting to do the infinite banking. If you've heard about infinite banking, IULs and things like that, health is wealth. So definitely want to take care of your body, and then also getting it younger. And then don't wait till you have kids. A lot of people think, well, I gotta wait till I have children to get life insurance. Get it when you're single. All right. Life insurance is an investment for your future and your loved ones. You know, so definitely explore your options, and definitely any questions you may have, I can definitely answer them.